Today's financial advice is sponsored by Endeavor Private Wealth. Chris McGee, managing partner at Endeavor Private Wealth, is now joining us. Chris, good morning.
Good morning. Thank you for having me.
Yeah, glad to have you with us. It's great to have you here at a new time. I'm used to seeing you earlier in the morning, a little later now. Well, historically low interest rates on everything. We're talking from savings accounts to CDs to government and corporate bonds. It seems like they may be hurting investors, especially those retirees who are really depending on that steady stream of income. What other types of investments should those investors be considering if they want to generate some income?
So investors looking for some income generation might consider dividend-paying stocks. And for that, it can be a nice complement to their fixed income portfolio. Companies, when they have profits, they can basically do two things with those profits. They can reinvest them in the company itself to grow it, or they can reward the shareholders by paying that out in the form of a dividend. And then investors that are interested in this form of income probably will be paying attention to the dividend yield that these companies pay.
Okay, explain to us what that dividend yield is.
So the dividend yield is just the dollar amount and cash amount that a company is scheduled to pay for how much you have invested in it. And I have a couple examples. If you have a dollar dividend that's being paid on a stock and the stock is worth $50 a share, then that means it has a 2% dividend yield. If you have a dollar dividend and a $25 a share stock, then that would give you a 4% dividend yield. And that, to give you an idea, the S&P 500 popular index right now pays about a 1.3% dividend yield.
Well, what else should we be aware of regarding the dividend-paying stocks?
Well, you should be aware that dividend-paying stocks can actually stop paying their dividend, or they can increase it or decrease it. And that's a little different than a bond, which pays a steady amount during the life of it until it matures. So if a company is struggling on the stock side, then they can potentially reduce it or even eliminate the dividend for a period of time till they recover. And then conversely, on the other end, if they're doing well and exceeding expectations, then they can actually raise or even pay a special dividend out.
Oh. Okay. Well, should investors then focus on those companies that have the highest dividend yield?
Not necessarily, because that can bring some additional leverage risk associated with it as they try to pay those high rates. And so what you want to be focused on is going to be the financial health of the company and also the cash position that they have. And that cash position is good and beneficial so that they can maintain that dividend without any interruption.
Any closing thoughts for us today, Chris?
Yes, in this low interest rate environment, dividend paying stocks can be a good option for people to look at. And they need to take into account their investment objective, risk tolerance, time horizon as they make those decisions. Because that principal investment is going to fluctuate based upon the market conditions. And it may be more or less when you go to sell it than in the end.
Well, this can always be a lot to take in, and of course we appreciate your easy to understand explanation on dividend yield stocks. So Chris, thank you so much for being with us today. And to continue this conversation with Chris and his team at Endeavor Private Wealth, you can call the number on your screen or go to endeavorpw.com.